Shit, yeah, we can hop on the Discord when you get off of work. You can hear me? Let me know if you can hear me right quick. Let me know if you can hear me right quick. All right, perfect. Yeah, so what time you get off? What time you get off so I can know what time to set up? What time you getting off so you know what time I can set up the meeting with you so we can go over what you want to go over. What time you getting off? What time you getting off? Cause I'm free all day. He said I get off like around 11. I should be home at. He said you should be home at 11. Oh, you mean at night? 11 at night? Like you mean like 12 hours from now? I gotta turn down this damn AC. Yeah, 12 hours from now. Yeah, I got you. So I got you, no pressure. We could do that. No pressure. We could do that. I'm gonna let it float for a little bit because I got like two more people that's supposed to be coming in. So I just want to wait right quick before I start. But it is, Brody. Nothing be good, man. Just had my second profitable month. So everything good right now. And it's the strategy. But once you find that strategy that you're gonna stick with, it's a wrap. It's a wrap. But besides that, man, everything going good. What's up with you? What they do? Like, especially having that. He said, hell yeah, that's what I'm talking about. But nah, One thing it's more than just a strategy though. It's the four key components. Back to what I usually always say: patience, discipline, risk management, and high quality setup. And then the other key is not trading all the time. That's the thing. I used to trade all the time, every day, as much trade as possible. Every setup pop up, I trade. That's where I went wrong at. See what I'm saying? Because it's about keeping your losers. It's about keeping your losers small and your winners big, right? So you wanna win more than you lose. The problem is sometimes when we lose, we'll go to revenge trading, and we don't know how to accept that loss. That'd be the problem. If you don't know how to accept the loss, you're gonna try to play get back. And when you one thing about playing get back, it's a guarantee. Because remember, you're guaranteed to trade. You have to guarantee put up money, right? So once you guarantee put up money, you have the opportunity to lose that money, right? So and then think about it. If you already up on the week and it's not a high quality setup or it's not a high quality trade, you're potentially giving back profits that you just won. You see what I'm saying? So that's why I do a lot more winning now, because once I get my win, right? Once I get my win, I don't take another trade until I see a high quality setup. So I'm saying, that's the thing. You have to know your setups. You have to know what's a high quality setup, what's not a high quality setup. That's why I always recommend paying for information, because if you pay for information, the niggas who you looking up to, they're gonna tell you what's a high probability trade, what's a not a high probability trade. So now that I found my three plays, them shits work almost every single time. The problem is you need context. So I'm saying, you need context under the trade. You just can't niggas be charging like 1,000. You need context. You need reasons. You need reasons why the trade's supposed to go higher or supposed to go lower. You don't just get in just because. So look, you said nigga be charging 1,000. You finding the wrong nigga. You gotta find a nigga that's not charging that much. The problem is, honestly, niggas be valuing the money. You can't value the money because the money is just a tool. You see what I'm saying? The money is just a tool, bro. You can't, oh, I want to give my money away, bro. That's the only way you're gonna that's the only way you're gonna get game, bro. That's the only way you're gonna get game, is about paying for information. The problem is, you don't the niggas that's charging $1,000, don't go to them niggas. You want to go to somebody that's charging less, that's actually profitable. So I'm saying, money is nothing, bro. It's the knowledge, bro. It's the knowledge that the money going that the money it's the knowledge that once you pay somebody, they're gonna give you the knowledge back, and they're gonna exchange for the money. But anyway, I just want to come and show y'all this high probability trade right quick. So look at this trade I caught. So look, the highest probability trade, he said, I just saw your line. Now look, the highest probability trades is the one that it either tap into. So Bob, let me tell you my strategy. So it's only me and you on here, and I'm on IG live. So there's only two people on here too. So do you know who ICT is? Because if you don't know who ICT is, I can't really break down my strategy, because you're not gonna know. Because that's my so buddy said, one nigga said, yo, one nigga said no. So the nigga who said no, Joshua Edwards, I don't like, well, me and you, we gonna talk after. So now you say you only know TJR. TJR, he trade ICT concept too. But I think, Joshua, you in the beginning stages, right? You in the beginning stages of actually trading. So you probably ain't gonna know. But my strategy is basically, I got three strategies. My first strategy is basically a pullback, right? My first strategy is basically a pullback. So you wanna see it pull back to an inefficiency. So let's say, so by per example, let's say it's going up, right? Per example, let me go to a 5 minute. Let me show you the number one play that be just happening all the time. So look, let's say you go to a 5 minute, right? The best plays would be a pullback to an inefficiency, bro. So per example, look right here, bomb. Per example, look right here. Look, this is one of my plays. So one thing we know that it's in an uptrend, right? It's going up. So now, once I know it's bullish, I want to wait for a pullback, a retracement into an inefficiency, right? Per example. So this is an inefficiency right here, which is a fair value gap, right? So we got this is an inefficiency right here, which is a fair value gap. Now, once it comes back into this zone, right? It's the pullback. It's come back to the zone. Now I will, and this is a 5 minute chart. I will go to a 1 minute chart. Once it touches that zone that I'm looking for, right? Where the fuck that shit at? Right here. Right here. So now look, we was on a 5 minute chart, which is the higher time frame chart, right? It created an inefficiency. And then look what happened. It pulled back. It pulled back to the inefficiency, right? So it came back down and it swept out some internal lows right here. I don't know if you know what internal lows are or sweeps are, but it took out this low. And look what happened. It stayed, it stayed in the upper half of this level, right? It stayed up here. You don't see no candlestick closes down here, right? You only see in the upper half, showing that's signs of bullish, right? That's signs that it's doing bullish order flow. You got bullish price action. Why? Because it's staying in the upper half of this 5 minute fair value gap. Right now, if it comes down here, you see how it wick down here, but there's no body candlestick closes down here. That's what you want to see because why? The wicks do the damage, but the bodies tell the story. Look at the bodies. The bodies are closing in the upper half, right? So we get a 5 minute inefficiency. We get a pullback to the inefficiency. We see that it's holding bullish order flow. And then look what happened. It creates a change in the state. So either you can get in off of just this tap into the inefficiency, or you can wait for the change in the state of delivery to get in, right? A change in the state of delivery is basically an order block, right? So you see all of these candles right here. This will be the first change in the state, right? On that higher time frame. Or you could just wait for this one. This change in the state right here. Wow. So we got a change in the state. I'm gonna put my stop loss. So we got everything we was looking for, right? We got to pull back to a higher time frame inefficiency, right? We see that the inefficiency is holding as bullish order flow, right? We get a bounce. We get a bounce off of this zone outside of the zone, and we're bullish. These are all of the confluences, these are all of the reasons why I'm expecting it to go up, right? So, and look what happened right here. It came back into another inefficiency. You see that right here? This is a lower time frame inefficiency right here. So it's giving us everything we want to see. So now I will get into my long right here, long right here. I'll put my stop loss right here at this low. So now you look, I'm risking only 16 points. And then look how much it ran for. Look how much it ran for. It did all of that. See that? So those are one of my plays, which is we understand that it's bullish, and it could be bullish or bearish. It could be going up or going down. Once you understand that, okay, it's going down on a higher time frame, you want to wait for it to pull it back to an inefficiency. Once it pulls back to an inefficiency, you want to wait. You don't want to just get in. You don't want to just get in the moment. Remember, you don't want to just get in the moment it comes into this zone. That's not what you want to do. You want to wait for it to come into this zone and leave it. Let it come back and see how it operates. You see that it came back in the zone once, it left it. Then it came back to the zone twice. It swept out the lows, left it, created a change in the state. That's bullish order flows. That's a bullish signature. And then you get in, and then you just target. Now targeting the highs or the lows is something else, right? But as you see, that play worked. My other play, so that's and you can use that play for going up or going down. So that's one of my high quality setups, right? And then my number one high quality setup is it's called a breaker. I don't know if y'all know what a breaker is. So perfect. So the perfect example right here. So look, you see how. So this is what I mean. How you see how this shit is just in here like this? It's chopping, it's chopping, it's chopping, it's chopping. You don't want to trade shit like this. You see all of it. This is like barcode. It's just going up. It's going down. It's going up. It's going down. It's going up. It's going down. It's going up. It's in this same range right here. You don't want to be. You don't want to take. You don't want to take consolidation. There you go. You don't want to take trades right here. So, but you see how. But remember, this is a zone. You see this. You see this inefficiency. It's inside of this inefficiency right here. So you look. It comes up, rejects, come back down, come up. It's consolidating, right? But then look. Eventually, there you go. Sideways price action. Exactly. Once you see this, do not trade. You want to wait. The moment you see this shit going sideways like this, consolidating, do not take a trade because you're going to get stopped out because it's consolidating. Do not trade when you see this. This is called high resistance. Another thing, if you got your notes out, this is what you want to write out. This is called high resistance. High resistance means basically where it's just going up and down. It's not respecting nothing. It's taking out the highs, taking out the lows, taking out the highs. It's not respecting nothing, right? It's not respecting nothing. This is high resistance. So anyway, you see eventually it after the macro is ICT, which is 950 to 1010, right? It breaks out of the consolidation. So you see how it broke outside the consolidation and it swept all of these lows, right? Then it comes down, comes back up. Now we get a nasty displacement. Now you can take a trade. Why? Because we have good order flow. You see this? It's just good straight down. The consolidation, back up. So you see how this is what you want to see. So you see how this line is a level right here, right? So look, you see how it's holding. So let me show you. You see how it's holding? Oh shit, I'm tripping. I gotta close it. I can see it on IG. All right here. So you see how it stops right here, it goes up. So this is the zone, and this is matter of fact. Let me show y'all just like this. I forgot I could draw it on here. This is the zone. Make that shit big so y'all can see what I'm talking about. Make that big. Red. Wow. And then now this is the zone. Right? So we see how both of these zones, every time it touches this line, it drops. Every time it hit this line, so you see it's back and forth. Now, and look what happened. It finally breaks out of it, which is a breakout, right? So this line is now resistance. It's not first, it was support, right? It was support. It's support, it's bouncing, support, 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 bouncing, resistance. Now it breaks out of the support. There you go, breaker structure. There you go. It breaks it and then it comes back, tests the line, and then look what happened. It just drops. Boom. Now, look what happened when it comes back to this line. Look what happens when it comes back to this line. It's being used as resistance now. Look, every time it touches it, it rejects. Touches it, rejects. Touches it, rejects. Touches it, rejects. Until finally, you see, look, finally we break out of that bitch. You see how we broke out of that motherfucker? But look how we break out. This is what I mean, a nice break. You see how it breaks out and it leaves an inefficiency. It leaves a fair value gap behind. That's what you want to see of a breaker structure. You don't want to see this. So you see how this is a weak breaker structure. Weak breaker structure because it's wicks. It's not closing aggressively up here. Anyways, It closes up here. Now it comes back and use the same line as yo. What is this red shit right here? Hold on. Why am I shit red? What the fuck is this red shit? Oh, it's a daily. This is a weekly fair value gap. That's why I'm like, why my shit red? Let me delete that right quick. All right. I'm like, why the fuck? Anyway, so look, it breaks the zone. Now it turns it as support because old. So look, so this is support is bouncing, bouncing, bouncing. It finally breaks through. Now it's resistance, resistance, resistance. Now it breaks through again, and now it's support, and it bounces. So you see that? See how it's bouncing because old support turns into new resistance. Old resistance turn into new support. There you go. The retest. That's a break and retest. These plays are higher probability. The problem is you need to be patient. You got to be patient. And these are just clear examples of order flow, right? But now, my favorite play of them all is a breaker, right? Let me show you the play. This is my favorite play. All right, right here. Look. So this is one of my favorite plays right here. It's called the bullish breaker. So when we get a low, we get a high, we get a lower low, and then we get a higher high. That's my number one bread and butter. He said you gotta be a cougar waiting on these players. Hey, you want to make money or you want to lose money? Because if you don't wait on these plays, you're gonna lose your money. But if you be a cougar and you wait, you be patient, you wait for the setup, you wait for the strategy, you gonna make your money. Because I thought the same way. I was like, damn, but I can't be waiting for. I can't just sit here and just wait for the play, wait for the play, wait for the play. But that's what trading is. Trading is a waiting game. Trading is a patience man sport. Gambling, gambling is a poor man sport. So every single time any trade present itself, and you know ain't high, you know that it's not higher probability, and you jump in, you're gambling. That's when trading and gambling are the same. You know what I'm saying? That's when trading and gambling are the same, bro. When you're just taking anything. Now you're gambling. But guess what? When you wait on a pullback to an inefficiency, wait for the change in the state, and then jump in, that's a high quality, that's a high probability trade. That's not gambling. I'm playing the odds. You know what I'm saying? When you wait for a breaker structure and then a retest, that's not like gambling play. That's a strategy that I'm taking. You know what I'm saying? But say it one more time. Trading is a patience man game. Gambling is a poor man's game. So you just gotta understand the difference. And then my last play be the SMT. Do anybody and when it's a SMT, change in the state, inverse fair value gap, it's a wrap. That's the last play I caught. I caught that play. Matter of fact, let me show you because I caught that play. That's the play I caught. Matter of fact, what was it? At? I think it was on a Thursday. Yeah, right here. This is the play I caught. So up here, so this is the exact play I caught. Let me break it down right quick. All right. So this high was taken, right? But ES did not take this high, right? So this same high, go back. So this high was swept out. This high got swept, but ES didn't sweep the high. He said, "How long it took you to learn SMT, bro?" Same shit, bro. I've been trading. I'm on my third year. This is my third year of trading. I just started ICD concepts last year. Well, like 9 months ago. This time last year is when I learned ICT. So it took what I'm saying, I'm still learning it. I'm not a pro. I'm not a pro at the SMT, but it's you have to have context. Like just because it makes it SMT, that don't mean that that's where it's gonna stop at. Ain't gonna go down. You have to understand what's going on with both pairs and understand the order flow of what's going on. So on this flow, this day, I knew that we was extended. I knew that we was in the premium. We was deep in the premium. So I know that, remember, the market does four things. It generates liquidity, it generated liquidity, hunts the liquidity, rebalance with inefficiency, and it rebalance to equilibrium. So I know it has to rebalance now. It has to rebalance. It can't just keep going up and up and up and up and up. You know what I'm saying? So once I knew that was up here, and ES was way down here, like ES was way down here, and ES was up here. So I was like, I was expecting a SMT. Anyways, once you create an SMT, now you want to wait for a change in the state of delivery and an inverse fair value gap. So it created a high here. I waited. Remember, I'm waiting for the change. I'm waiting for the inverse fair value gap and the change in the state. Nothing. Right? It was right here. So it came up. So this is the change in the state of delivery. These two down, these two up, these two blue candles right here. Bam. We got a change in the state with a fair value gap, which is AKA order block. And we got an inverse fair value gap right here. So you see this. So you see how we got a bullish fair value gap right here, a bullish inefficiency right here. So I use that as the inverse. And look what happened. So we got the SMT, right? We got the SMT, we got the change in the state of delivery, and then we got the inverse value gap. And it came down, and when it hit here, this is where I got in at right here. And I rode that bitch. I rode that bit all the way to the bottom. You know what I'm saying? So he said, what he said, okay, how long it took you to I did, I read it already. Gotta understand price action. I feel you. Bruh, you have to understand price action. But once you understand order flow and price action, it changed the game because you understand what's going on. You understand what's going on. You understand market structure shift. You understand the breaker structure. You understand a weak breaker structure. You know what I'm saying? So it's more than just learning. It's more than just a play. You know what I'm saying? He said, I took that same as that trading good shit. I gotta say, how does trading actually bring in good cash flow if uh if you know what you're doing? What you mean? By making money. That's how trading bring in good cash. You make money. When you trade, you make money. When you lose money. But the thing is, you want to have like a objective. You want to be like, okay, I want to make what $500 a week, whatever you want to make. See what I'm saying? So you want to break it down. You want to wait for your good plays. Either you're going to over leverage, right, or you're going to just take your one or two contracts and trying to let that get you to where you got to go. The problem is you do not force trades. You want to wait for your trades to actually present itself. See what I'm saying? And a good RR. So what I'll be doing, I don't really do the R and R. I do the R. I do my risk to reward to see, okay, what I'm risk. That's the first thing I do. I see how much I'm risking. I don't really care about the reward because I trade liquidity. You know what I'm saying? So I trade from liquidity to liquidity. So I'm saying, so I'm trying to take my trade to the low. So whatever low I'm looking for my objective to be. See what I'm saying? So like look on this trade, my R&R was amazing. But usually my R&Rs are going to be great because the way I trade it. That shit. My stop loss would have been right above. Look, risking 19 points. So either I take it at this low, which is 50 points. Look, that's a fucking 2.6 R trade. If I take it to down here where these relative lows at, look at that. That's 89 points. That's a 4.6 R trade. You see what I'm saying? So I don't really focus on my reward, but I focus on my risk. I'm always understanding, okay, how much risk am I putting up? because that's how much money you're willing to lose. You know what I'm saying? So he said, you're trying to stop loss. So what I do, oh, bomb, hey, boy, hey, what you, okay? I like that question. So now look, this is how you adjust your stop loss. You first of all, you want to understand the order flow. Because if you don't know about order flow, you're not going to know where to put your stop loss at, right? You don't want to just be trailing it, trailing it, trailing it, trailing it, trailing it, because it's going to eventually come and stop you out. Unless that's what you want to do. If that's how you want to trade, cool. But what I do is I trade. I drag my stop. So let's say I got in here, right? The play I got it up here. My stop loss was above this investment value gap. Once it creates another change in the state of delivery, which is another order block, I'm trailing my stop because now I'm not expecting it to come back way up here. You know what I'm saying? So, for example, so let's say going in short, I went in short here. Let's say my stop loss was up here, right? And let's say I'm targeting. So this is TP1 right here. So the TP1. Yeah. So you basically go back to break even. Yeah, basically. Bomb, TP2. So now look, let's say I'm targeting all the way down here, right? Bomb. So now I'm in a trade. Right now, my risk reward, I'm risking 18 points. That's how much I'm risking. That's how much. And let's say I get so, but I see somebody say, how many contracts do you trade macros or mini? I trade macros. Why the hell would I trade a mini? You do not want to over leverage, bro. Let me tell you why you don't want to over leverage. Because if you over leveraging, bro, you're not going to be focusing on these candlesticks. You're going to be looking at the money. You're going to be looking at the money. And if trading a big size, bro, that shit going to make you crazy. Because all you're going to look at is the money. And it's not going to make you focus on the chart. That's why you want to take your time, right? Trade one contract, trade two contracts. That's it. Until you understand how to really trade. And then remember, you can easily buy more contracts. You can easily buy more contracts. And now you can make full $500, $600, $700, $800. But wait until you actually have confidence in yourself. Wait till you actually understand what's really going on before you start over leveraging. You see what I'm saying? But anyway, so let's say once they take this low right here and it creates an order block, I'm dragging my stop to the nearest change in the state or to break even. Right. So once it take out a low, I'm not expecting it to come way back up to my break even. So that's why I be trading with two contracts, because if you trade one contract, either you're gonna take your TP here at right here, or you're gonna bring your stop loss to break even and then let it ride. But remember, you ain't taking nothing off the table. You ain't taking no profits if you only got one macro or one mini, right? So that's why you want to have at least two macros. So once they hit your first take profit, you can sell half of it, and then bring your stop to break even, and then you can let that one float all the way down. You see what I'm saying? So on my top step, when I trade on my prop firm, I trade like five minis, like five macros. I mean, when I trade on my props, trade like five macros. When I trade real money, live money, I only do one or two macros. Mm-hmm. Hmm. What happened? Shit, I'm good. Am I hungry? Shit. You gonna make something for your boy? What I want? Uh, shit. You can make a nigga the usual. Yeah, I'm on Instagram live right here, and then on YouTube live. I'm trying on YouTube live. He said I might have to use the idea on the contracts. Ah, smart guy. So for real, it don't look red, but it look like it's swollen a little bit. Well, yeah, it look red now. When you turn to the all the way to the right, it looked red on the right side. He said, so yeah, bro. Remember, you don't want to be in a rush, bro, to try to make money, bro. This shit gonna take your money. If you just looking to make money, bro, this shit gonna take your fucking money, bro. It's gonna take it. And then you gotta put up more money again. That's why I say, bro, trade prop firm, bro. Until you really know how to trade, bro, don't put real money in this shit yet, bro, because it's only gonna lose it, bro. Because we just don't know enough yet. It's not even, you know what I'm saying? You just don't know enough yet. You want to trade on a prop firm or trade real money with one macro and then just learn this shit. Find somebody that you can learn from. I constantly pay for information, bro. That's why I always get better. So I'm saying you gotta find a teacher, bro. That's how you're gonna get there faster by finding a teacher. He said I trade like 4 on Top Step myself. That's good. I hope you said 4 macros. Cause think about it, even with the Top Step, it's a 50K account, but you don't have 50K, bro. You only have 2,000. You don't have 50K. You have 2,000, bro. So if you trade with a mini, bro, depending on what your stop loss is, that's a $500 trade right there. You lose 500 on one trade, you got 4 more trades left. Sorry, 3 more trades left because you can only lose 2,000. That's all you can lose. So trading with a mini is too much. Now, if you're trying to just hurry up and pass it, you could try that, but that's only gonna get you so far. Because if you don't know how to like sit on your hands and not trade and take the right trades, you're gonna take bullshit trades and you're gonna end up giving a lot of money back. You feel me? So, but anyways, man, I'm out of here though. I just want to come on right quick, give it a game right quick, you know. But another profitable week, real money and on a prop firm. Another profitable week. So I appreciate y'all tuning in, watching the nigga. You got a link, bro. Nigga, I trade every day live, bro. Like I said, I'm in the Discord. I'm in the Discord. I already got lifetime membership, bro. Fuck with me, bro. You feel me? And you could just be in the Discord with me. You know what I'm saying? And getting that good information. And my mentor, bro, that nigga really know how to trade, bro. My mentor really know how to trade, bro. And he's disciplined. The shit that most niggas aren't. I'm already locked in. Say less. Say less. So you already know Monday morning, 9:30, boy. You already know who to hit up because I'm gonna be live. Not on my I'm gonna be live on my Discord, but I'm gonna be live. So I trade live on my Discord, but I have the Discord that I pay for on another monitor, and I'll be listening to him. So I'll be getting analysis and shit from him also. You see what I'm saying? What I really do is now I be in the trade before he be in the trade. Like now we be seeing the same shit. You see what I'm saying? But anyways, I catch y'all later, man. I appreciate y'all for tuning in. Let's get it.